Our session participants are Kurt Averill, Jackie Meyer, Aaron Borden, and Tanya Baber. And we would like each of you to tell us a little bit about yourself.
Sure. Well, first, Gail, thanks for having us, and we're excited to be part of the panel. My background's a little bit non-traditional. I'm an attorney. I was an attorney in Manhattan, a tax attorney specifically, and went from being an attorney to founding a startup company, a software company called Canopy. Canopy builds tax resolution and practice management software. We're about 180 people out in Salt Lake City, Utah, building the next generation of software tools. And that transition from practicing, tax to software has been a really fun one for me.
Cool. Hi, I'm Jackie Meyer. Hello. I'm at Meyer Tax Consulting. I own a 5-person CPA firm here locally in Dallas, Texas. So I'm glad to be here. Thank you.
And I'm Aaron Borden. I'm a CPA and attorney as well. I practice almost exclusively tax and white-collar litigation. Before becoming an attorney, going to law school, I practiced as a CPA in a CPA firm for about 5 years.
I'm Tanya Baber. I have my own practice called Tax Edge. I have the pleasure of being able to work with Canopy, and I get to work with a lot of accountants across the nation and consulting them and providing continuing education. So it's a great pleasure for me to be here as well.
Outstanding. Thank you all so much for being here and for joining us today. It's really great, and we're thrilled to be able to present this as our last session of the day, because I think it's going to be a particularly exciting topic. I'm a tax accountant myself, so yes, tax is exciting to me. But we're talking about tax resolution today, so why don't you start by telling us what is tax resolution? Kurt, do you want to kick this off?
Yeah, so tax resolution is essentially helping taxpayers with problems that they have with the IRS. And those problems can span from, or can really vary pretty widely. They can be maybe an unpaid tax that is due. It can be a penalty or interest that's been assessed against the taxpayer. There are a number of different problems that can arise, and CPAs can help resolve those problems on behalf of their clients.
Okay, and can you talk a little bit about what those kinds of problems can be?
Yeah, so say for example, I was actually just looking at the Government Accountability Office statistics this morning, and there are a couple of different problems specifically with unpaid tax that can come up. And just maybe statistically, I like to throw out some numbers to just show the scale and size of these problems, but there's currently $37 billion owed to the government from taxes that were shown to be due on a tax return but not paid. There's an additional $13 billion due to the government in taxes that were never actually filed but have been assessed against a taxpayer. So unpaid taxes is one of the big types of tax problems that can occur. Another, again, going back to penalties. So say a taxpayer overstates their deductions or understates their income, and the IRS assesses a penalty against the taxpayer. That penalty is another type of case where the taxpayer receives a notice in the mail from the IRS showing the unpaid penalties and interest. And the first thing you typically do when you get a notice from the IRS as a taxpayer is freak out, because it's not usually a happy birthday card or something like that. And the next thing you do is you take it to your accountant to figure out how to solve that problem. And so getting an abatement of the penalty and perhaps maybe a little bit more difficult to do, but the interest as well, is part of that tax resolution process. There are other types of cases out there. There are liens. There are levies filed against taxpayers. There's spouses who perhaps filed tax returns with their spouse and didn't know about the amounts that were due, and there's a mechanism for releasing that spouse from that liability called innocent spouse relief. So it really is a fairly broad category of tax services and needs on that encompass this world of tax resolution.
So those of you who are in practice, what are the kinds of cases that you see walking in the door? And actually, I'd like to kind of paint the picture of the typical, maybe there's not a typical, but typical client who walks in. Is it generally a client who is more likely a victim of a bad situation, or is it a client who's trying to get away with something, or is it a kind of a mix of both?
Well, I wouldn't call it trying to get away with something, but maybe they've had a misunderstanding with the government on a position. And part of that is the resolution I would add to that is, trying to keep it from getting worse. Maybe it's what the IRS would view as trying to get away with something, but trying to help maintain that as a civil examination and not turn into a criminal investigation or grow into multiple years or things like that. So some of the tax resolution is not really just lowering the tax or minimizing it in that particular year, but keeping it from expanding is also part of what's involved in resolution.
Okay.
Yeah, I would say the main thing that I tend to see, which I work mostly with executives and high net wealth, so you're not seeing a lot of people that aren't able to pay their bills, but a lot of mismatched information with what the IRS has reported to them versus what's reported on their tax return, or even, the IRS direct pay estimated tax system. I had a client the other day that thought they had paid $25,000 online for their quarterly estimate, and the IRS had processed it as $250. But the receipt, the PDF receipt, said to $25,000. So it's just, simply calling them up and telling them what the problem was and figuring it out, which takes a lot of time, unfortunately.
Yeah, the IRS hold line is notorious.
Yeah.
Even the practitioners.
Yeah.
For mine, I wouldn't say that there's necessarily a typical client, but we do see a lot more of the collection cases. And as far as what brings them in the door, sometimes they've shoved it aside, or they try to ignore the problem for a while, and they finally reach this point. And it's always curious to me, what is it that makes them reach that point? But they're finally ready to face it. Instead of just ignoring the letters and having their head in the sand like an ostrich, they're like, I know I'm at fault. I know that I really messed things up, but I don't know how to fix it, because now it's grown. Maybe it's a few years of non-filing, or the debt is so big that they can't manage it. So we do a lot more of the collection cases, but there's still audit, examination, those kind of things that are in that realm of tax resolution as well.
Right. All right, let's take just a really quick break. We're going to hear a little bit about canopy tax, and then we will come back for your first CPE code for this session. So we'll be right back.
As a practitioner, I found it tremendously rewarding to help people with tax problems. The outcomes often dramatically improved my clients' lives, relieving a huge burden that they couldn't lift themselves. But the inefficiencies in working with the IRS and the paperwork drove me crazy. I started Canopy because I knew with today's technologies, I should be able to resolve my clients' issues without all the inefficiencies and make more money in less time. Canopy takes the chaos out of tax resolution. It provides a better experience for you as a practitioner and a more modern, streamlined experience for your client. It means you can stop doing busy work and start enjoying the freedom to focus on your clients and their needs.
And we're back. And the first CPE code and CE code, it's all the same thing, for this session is now on your screen. So please make note of that if you need credit for this session. And we will continue while you're writing that down, but be sure to write it down. So there are several kinds of situations that can benefit from an active resolution process. So I thought we'd just kind of talk about these different types of resolution situations and have our panelists share some stories of what they've encountered in these areas and how resolutions work and what the best practices are for the tax accountant who's trying to work with the IRS. So first type I have is, as Tanya mentioned, someone comes in with many years of unfiled returns. So where do you start, and what's the best way to help that client?
Right, and first you have to kind of step back and assess that. And there are occasions where maybe you want to file all those years to get them caught up, but you have to, a lot of this in the tax resolution realm does come down to having sufficient knowledge and comfort with what you're doing. There are revenue procedures that can say, well, as long as you file 6 years for federal, that they'll be in the clear or in the good. So you have to take a step back and assess that and say, okay, what do we have to do to get them in compliance? That's the first step. And once you get them in compliance, then you have something to work with. So that's what we always consider as, assessing the situation and getting a good feel for what's going on.
And I think in those contexts, it's also important to see if they've been contacted by the IRS and see what kind of agent they're dealing with. If they have been contacted by a special agent, which is investigating criminal charges, you may want to hold off on filing those unfiled returns, because it could be an admission used in a criminal case. So in part of kind of that assessment is definitely seeing where they're at in the kind of the IRS radar in terms of being evaluated or audited or even potentially criminally prosecuted. So.
And is the process typically to file all the returns at once and present it as a package deal to the IRS, or do you just knock them off one at a time?
A lot of that depends on the situation. You do have to have some caution, and exactly true is that you have that boundary where it can be very easily considered, well, maybe this is somebody doing this intentionally. This is the reason they weren't compliant. And sometimes the taxpayers are like, 1 year got out of control, and then pretty soon it was 2, and then 3, and then 5, and they just feel like they're buried. But from the IRS's standpoint, from the state standpoint, they'll say they're doing this intentionally, so you have to be able to paint your taxpayer in a different light.
But generally, before you can move on to like a collection alternative, an installment agreement to pay that, if they're not able to full pay, you will have to get all those tax returns kind of caught up. So if you can't do it all at once you've kind of determined that the criminal exposure is not there, then you will have to get those, 6 years worth done to get them into an installment agreement and forestall collection activity.
And it's common also that with taxpayers who haven't filed their tax returns, the IRS may have filed a tax return for them on their behalf. It's called a substitute for return, and that is another consideration as you're looking at like whether to replace that substitute for return with a new return or not. There's also dischargeability questions that come up and bankruptcy issues around substitute for returns, and so the unpaid or the unfiled tax return question is, pretty nuanced from a number of different legal and tax angles.
So I know, Kurt, you can answer this. If you're in a situation where your client comes in and perhaps doesn't know that the IRS filed a substitute return for them, or maybe can't quite remember when they last filed a return, and somebody has to go in and retrieve those old returns and find out where the last one was that was filed and what does it look like. And I think I understand Canopy can help with that.
Yes, yeah. So one of the most time-consuming things at the very beginning of a case is actually understanding, the whole landscape of what's happened with this taxpayer, their tax history with the taxing authority, whether the IRS or the state, and so that you can make an assessment about how to move forward. And specifically, the substitute for return is noted on, at least on the federal level, on their IRS transcripts. And so pulling those transcripts is one of the first steps typically when I brought on clients that I would do, just so I can get a better understanding of what was happening. And traditionally, historically, I think we call the IRS and we ask, wait on hold for an hour plus, which is pretty common to get those transcripts faxed to us, assuming we have a power of attorney on file. And Canopy actually does make that process a lot easier. So we, once the power of attorney is on file with the IRS and the CAF unit, which is a requirement to pulling transcripts, Canopy can actually automate that process. So it can pull the transcript for you. And not only does it pull the transcript, but it actually takes the transcript and all those years of tax filings and all the different types of transcripts, count and wage and income and tax return transcripts. It also summarizes them and creates a report for you and pulls out some of the information that it might not be totally evident on the transcript within the four corners of the page. So for example, the CSED date. CSED date is typically something you can only get from the IRS if you call. And Canopy will actually slice through all those codes on the transcript and estimate that CSED date so that you don't have to call the IRS. And it's all done online in a secure environment. And that, incidentally, is completely free to CPAs, and practitioners everywhere. So it's not something that we charge for. You can literally just go in and pull transcripts in a matter of minutes. And it has really changed the way that accountants pull transcripts across the country. There are literally tens of thousands of accountants who use Canopy's transcript tool.
And you mentioned the CSED date. For those who might not know what that is, can you explain that?
Yeah, the CSED date is the collection expiration date, and that is the date at which, at least administratively, the IRS will stop collections against a taxpayer. Typically, it's 10 years from the date that the return was filed. And that date, again, is a date that I would, historically have called the IRS to get because it's not in the transcripts. But with the transcript codes, in software, and lots of smart accountants who are building that software, we can essentially extrapolate it out and show it to you on the screen.
Okay.
Yeah.
And it sounds like Canopy's using the transcript delivery, getting those transcripts
exactly.
electronically. And I kind of have a preference for getting an electronic transcript like that, because if you are close to the CSED date and you call the IRS and actually talk to a physical collection person and you say, hey, what's the CSED date? And it's 3 months from now, you've just alerted them that they've got 3 months to go get a judgment or really get aggressive on this.
That's a
So
great point.
even with, if CSED's not an issue, just if it's a collection case, a general case, you don't want to necessarily alert them to, hey, taxpayers out here and has, here's a live person at the IRS looking at the fact that they have 8 years of unpaid taxes. So that electronic transcript delivery is, in my mind, a really good way of kind of being low key about figuring out where the
Staying under the
taxpayer's
radar.
at. Yeah.
Yeah.
It's a great point.
And with the everything taken away from us with the IRS e-system, it's really nice to have a different service that can substitute in with the transcript delivery. Can I ask a question about how long you're seeing it takes? Because power of attorneys, we actually, a little tip for practitioners, we collect a power of attorney up front for every single client, because I was tired of having to deal with it on the back end, because we do offer, IRS notice protection and audit protection. But it seems like it's taking about 10 days to process with the IRS.
That's pretty typical. Yeah, once the power of attorney is sent to the CAF unit, it's 7 to 10 days for it to process, and then once it's on file, you can then pull the transcript. Getting the power of attorney up front is a really, to Jackie's point, is a very great. It's a good strategy, especially right there with the engagement letter. They're signing documents anyway.
Oh, yeah.
Have them sign the engagement letter, the power of attorney, and then it's not one of those things that you have to do after the fact. Yeah, that's a great point.
And then sending that on to the CAF unit and not relying, like if you're responding to a notice, not relying on the IRS to go ahead and send that to the CAF, making that extra step of faxing it to the CAF unit when you get it, I think is important.
Yeah.
Oh, good point.
One other thing I might mention on the digital side of transcripts that I've really enjoyed is the fact that it actually versions the transcripts and saves it all. So you can go back and look every time you pull the transcript from the IRS. Canopy will essentially version that transcript. So you can look at a history and how things have changed over time along the record, and that's just another thing that just makes it a little bit easier.
Nice. So another situation that I think tax accountants often run into is clients who, and often maybe new clients who come to them, and they filed their tax return, but they didn't pay the tax. Or it may even be one of their own clients, and they went ahead and filed, and they were given directions to pay the tax, but they didn't do it. And those taxes start to pile up. And they start, I think they think they're under the radar until they start getting the penalty and interest notices and show up back at the tax accountant's door saying help. So what kind of situations are you finding with that, and what kind of success and resolution are you finding with that?
I'd say it's very common. Our clients come to us expecting us to be the miracle workers. We're the hero, but when things go wrong, then they really have that expectation. We're going to fix it for them, even if they made the error, they didn't make the payment, whatever the case may be. So there are many occasions that your own clients may come and go, yeah, I didn't make the payment, what do I do now? Okay, well, let's see what our options are for this. So collections is the general world that sits within, and it's many, many times that maybe even a situation that their finances changed. Maybe they had good income the previous year and they're taxed on it. Now they really don't have the ability to pay. And we see a lot of those situations too, as their finances change, as the economy changes as well.
And those levy notices are coming out so much sooner now than they used to.
The automated process, yeah, all these letters are all sent just with the computer system and the client. I don't know about you guys, I get occasional clients that they have a whole stack of letters and it's like, well, did you open them? Come on in, let's talk about what's in them. Not that ever happens, right?
And if the client is willing to and interested in paying that out through an installment agreement, depending on what they owe is going to be a big factor on how complicated it is to get that installment agreement. A client that globally all their tax returns for on the federal side owes less than $100,000, it's relatively easy to get them into $50,000 to $100,000 into an 84-month payment plan. So if they're right at that $100,000 level, or if they can get to that, they can pay $1,250 to $1,300 a month for 84 months without a detailed financial statement. Just fill out a Form 433D, include a direct debit from their bank account, and they can get into that. If it's $50,000 or less, they can pay it out for 5 years, 60 months. It's usually like $700,000. If it's over $100,000, then they're going to have to do a much more detailed financial statement. And depending on whether they're, an individual without a business or a business, depends on which version of the Form 433 they have to fill out. And then you have to worry about, if this is a sloppy taxpayer that hasn't been doing good bookkeeping, are you making a false statement to the IRS if they fill out a very detailed financials? So that's some things you have to balance. And, if you can get them down below that $100,000, it avoids that financial statement filing, and you can do that simplified installment agreement and file a Form 433D. And probably technology, for those that don't know exactly which version of Form 433 to file, probably technology like yours probably helps kind of weed through that, I would.
Keep it current. Yeah, absolutely.
Mm-hmm. So what about situations where your client comes to you and says, oops, I forgot to tell you about this business I own, or this 1099 I got, or this investment I had and sold and forgot all about it, or misreported income, basically, that the way they're telling the story maybe wasn't intentional, but nevertheless it's their fault. So what kind of situations do you run into with that?
In those cases, I'm going to hope that it's that we find out about it before the IRS does, because then you can take actions to kind of correct it and be like, oops, yeah, we made a mistake, but here's the correction. Mm-hmm. But there are occasions where it's the other direction. They didn't realize they made the mistake until they get a CP 2000 notice, which is the one where the IRS is electronically matching information and goes, oh, that's interesting, you missed this.
That didn't show up on your return.
Yep. So that's not as favorable, because then they get penalized a lot more. But it depends on the timing. Both of them still result in the same end, which is, okay, do you owe the tax? Do you not owe it? And how much, and how are you going to pay that back? So that's usually the result of those.
And I think being careful there, if it's clearly the client's fault, or if there's some argument that the client may have been relying on you, that there's, if you might have a conflict representing them. If later on they're going to argue that they're relying on you to prepare it accurately in the first place, you maybe shouldn't be involved in the resolution process if there's going to be a dispute later on whose fault it was. So.
Makes sense. So we're going to pause here for our second CPE code, but first we're going to have another word from Canopy. And I just want to mention that Canopy, if you don't know it already, is an easy-to-use tax resolution and practice management software that makes tax professionals' work more efficient, simple, and lucrative. Canopy offers the free online tool that you've been hearing about that provides IRS transcripts and reports. And you can find out more at CanopyTax.com. So we'd like to see a little bit about Canopy, and then we'll come back for your second CPE code.
Canopy just made your life simpler by integrating IRS transcript delivery and reporting. With a few clicks, you can access IRS transcripts using your IRS eServices login and get detailed transcript documents and reporting delivered to your Canopy account in as little as 2 minutes. Organize client by client, along with important information like whether your CAF check succeeded, what person at your firm requested the transcripts, and more. Once the quick and easy retrieval process is complete, Canopy automatically breaks down the transcripts into 2 easy-to-digest views. First, the actual transcript documents organized year by year, section by section, with 1 click to download everything to share it with your client. Second, powerful and intuitive reports that instantly give you the most important data points like penalties, interest, active examinations or liens, account transactions, payment history, and more. Requesting and analyzing transcripts has never been so effortless. Plus, you can jump straight from a client's transcripts to their engagements, client dashboards, so all your work can be done in one place more efficiently than ever. Robust, yet simple.
Welcome back, and thank you for staying with us still this afternoon. We have your second CPE code on the screen right now, so please write that down and keep track of that for future reference when you're ready to request either your CPE or your CE credit for this session. I want to just mention again, as we're getting closer to the end of the session, that if you've been here 10 hours today, we really want to hear about it. So be sure to let us know. And if you do, we might have some surprises for you, because if nothing else, I've got lots of swag here. So, so let us know that you've been with us, and actually we just really want to share the joy with you, so that'll be great. And then we're wondering if maybe you would like to be a tax resolution accountant yourself. And so we have some experts here who can talk about the process and what makes a good tax resolution person, and whether or not, if this is something you're considering doing, maybe you can find out a little more about what that service would be like to offer. So I'd like to hear from our experts here.
Yeah. Maybe we'll start on the personal side of that question, and the satisfaction you get out of helping people with tax problems, and then we'll move to maybe the market and economic, reasons. But just by way of background, I was an attorney in New York, and I did transactional law. I didn't do tax resolution work. But I would take occasionally these pro bono cases helping low-income taxpayers with their tax problems. And after a couple of cases, actually my very first case, I realized there are, if you're not a tax pro, and I don't think this is rocket science or hugely shocking to anybody, but if you're not a tax pro, the tax law, and especially the IRS, is a pretty daunting thing. And so especially for a low-income taxpayer who can't afford representation. And at our firm, fortunately, they encouraged us to do these pro bono cases, and I found, and I was glad that they did. And we would take the cases on and help these taxpayers resolve a problem. For us, even though it is the IRS and we understand it, for them, it's something that they really just don't understand, and it weighs on them. It's a heavy burden to know that the IRS is asking for something from you, and it's probably something that you might not even be able to afford to pay in many cases. And it's also a taboo subject, so you don't bring it up with your family or around Thanksgiving dinner by the way, I owe the IRS some money. So you really kind of don't share that burden. And so when they come to a tax practitioner, you really are, as the tax practitioner, their hope to getting some sort of resolution, and whether it's whether it's actually settling that amount or just coming into compliance with the IRS. So on a personal level, I would say it's very satisfying, because you really can come in and help people do something that they literally cannot do for themselves, and that's a really meaningful impact. On the economic side of the equation, it's a big business. For those people who can't afford to pay a practitioner, there are about 13.3 million taxpayers in the United States who have some sort of tax problem, outstanding case with the IRS. So it's almost 1 out of 10. And that was according to the 2015 tax book. So being that large and that many people, we actually did a ton of research around what firms or practitioners were charging for their services. For different things, penalty abatements and offering compromise and audits, and we have a lot of that on our blog. But one of the things that we found is that on offering compromises, and the fee was between $2,000 and $5,000, and the amounts outstanding that they were settling were fairly significant. And offering compromise isn't probably the most common tool in the tool chest to use, but what we also found is we asked these tax practitioners, how many hours are you working on the case? And we figured out that on average, a practitioner is making $250 to $300 an hour doing tax resolution cases, and that's a significant rate, especially maybe in comparison to tax prep. So I always like to look at things, first through the human element, and how does it help people, and it truly does, and then also, we make a living, and we're experts in it, and this is what we do. So on the other side of it, it also can make a ton of sense to do tax resolution, and then getting into it, find a mentor, an expert in the space, resources which there are a tremendous amount of online, and maybe I'll let the rest of the panel fill in on that. But there's a lot that you can do if you don't know tax resolution that can get you into it. I was not a tax resolution person and moved my way into that space over time, and really, really enjoyed it.
Yeah. Well, you said it so well, but I would say, earlier we did a tax update session, and Gail, we were talking about AI and how it's kind of taking over more compliance, prep work, that kind of thing. And so this is actually a really great value-added service that is more higher level that people can get into and, provide a lot of value.
Yeah,
So
that's a great
it's a good way to go.
Yeah, and I would say just having worked in a CPA firm and now being in a law firm where I do tax resolution, conflict all the time, it's kind of a retraining. You have to retrain yourself a little bit on kind of how you view things. As a CPA, we're trained to be independent and objective and kind of full disclosure. And as an advocate in a resolution position, you need to be an advocate. You need to be persuasive for your client. You need to be creative on the solutions, and it's downplaying the significance of the bad things and upplaying the positives, whatever they are. So instead of just really being objective in dealing with the IRS, you absolutely have to be honest, but you can downplay the significance of the bad facts and kind of focus on the positives. And so that advocacy and persuasion is what makes it really exciting and fun to do, but it's also kind of something to be aware of, is really rethinking about how you approach a resolution case versus just a preparation of tax returns.
Yeah, absolutely. And to echo pretty much everything that Kurt had said, it's that for me, I was kind of driven into it from a need, but from my clientele, and I recognized I didn't really think I knew enough. So I strived and put money and effort and energy into learning as much as I could. But the feeling you get when you have that one client that goes, for the first time ever, I've been able to sleep at night. And you're going, wow, that was something that I could do. That was within my power. But you want to make sure that it's that, knowing enough to be dangerous thing. Finding a mentor, that's huge. I have the pleasure of being able to work with Canopy, although I have my own firm, helping to provide information to them. But I have the greatest pleasure for me is I get to help consult with accountants out there that are going, it's not in my comfort level. So we're able to kind of help with a particular case, help to give you just that extra little boost, so that way you can go and help that client and advocate for them. But it is an amazing part of the industry to be part of.
We've heard a lot of stories from all of you about how good it feels to do this work and to be able to help people. In terms of preparing to do this kind of work, what kind of skill set, education, and even mentality do you need to have to be able to deal with the IRS every day and on their terms and come away, in a situation where you can really help your clients?
As far as mentality, I guess a willingness to learn. It sounds so funny because when I first started out in the industry, I was afraid of taxes, and the thought of going before the IRS and arguing on behalf of a client, that was frightening. But the more you learn, the easier it becomes, and it's the practice makes perfect mindset. But you have to be willing to learn, to absorb as much information as possible. And I've transitioned now to the other side of the fence, to where I'm now educating and helping people to learn about tax resolution. But the best thing I can say is be willing to open your mind and learn all these different things, and we learn from each other so much. So share your knowledge with the other accountants and other folks in the industry, because stuff changes so fast all the time.
And I would add, I think as far as the body of knowledge, it's in terms of IRS disputes, it's the getting familiar with the Internal Revenue Manual. That's kind of the starting place on some of these things. So, with the advance of technology, you can Google whatever that tax issue is and then add Internal Revenue Manual, and it'll take you right to that particular procedure. And so kind of understanding the procedure the IRS has to follow and that's really where to start, is with the Internal Revenue Manual. And just to kind of comment on what they said, having someone as a mentor that does this, someone that knows what they're doing, that's been through it before, is a great resource. And you can meet those through networking events or hopefully someone at your firm, but having that kind of resource of an experienced person is great to have.
I think with the daily frustration of dealing with the IRS, what's important is finding efficiencies in it. So, as you learn and grow, what things you can actually call and resolve via phone with the IRS, what you cannot. And so instead of wasting your time trying to go down that path, that you need to draft that letter or, go a different direction. And so it's important to just kind of find those efficiencies and document them for the rest of the firm so that everyone learns from that.
I would go along with, what Aaron said about the reading manual. The IRS has specific things that they can and can't do, and it's all set out there. But you can go in and say, well, I want to talk to you about a penalty abatement for my client, and here's the situation. And well, if it doesn't fit into their situation, they don't have the ability to say yes. So knowing what they can do before you even attempt to communicate with them makes a lot of sense. Can you share any stories, without obviously naming names, about sort of your best and worst case scenarios that you've had with clients or with the IRS experience, and just to give our audience a little bit of feel for a day in the life of what really goes on?
I don't know, I'm having some joy recently because now that I'm kind of on the consulting side for a lot of accountants of sharing in their joy. So I had one story that was just shared with me this last week. Somebody emailed me like, just because of what you showed me and what you taught me about penalty abatement, I got my client $75,000 of abatement, and I'm kind of like dancing around in my chair, and I go up to my staff, I'm like, you wouldn't believe what just happened. And it wasn't my own win, but I got to share in it because the accountant is sharing with me, and I've had similar wins all within the recent few months because it's so burdensome, and somebody's trying their best in many cases, and then we know the whole gamut of different stories that the client has, but when you're able to have those small wins and it helps somebody move on and kind of get going with their lives without that burden, it's pretty exciting.
And what I do criminal tax work as well. So the most exciting cases for me are when they're considering a criminal prosecution and we manage to prevent that. So earlier this year we had a client that was being investigated for it had a civil excise tax issue on distributions from a self-directed IRA. And in a criminal tax context, it's one of the few areas where if the local assistant U.S. attorney wants to bring a criminal tax charge, they've got to get approval from the Department of Justice Tax Division in D.C. And as a taxpayer, you have the right to go up there, or your representative to go to D.C. and make your case for why they shouldn't bring a criminal case. So we were able to go up earlier this year to the Department of Justice and talk about why excise taxes are a horrible case to bring a criminal tax prosecution. I mean, even the professionals don't understand it really well, and if they're trying to explain this to a jury, they're going to have an uphill battle. And you know, those kind of arguments resonate with the Department of Justice. They want simple, easy to prove frauds, not where they have to bring in regulations and things like that. And so that's a great example of, you know, a case that went well and enjoyed and seeing a positive result. And you know, that's just one example of some of that, I think.
I don't have anything that exciting, but you know, I mean, just this last week, we had a broad spectrum of, you know, IRS agents we talked to. You know, we went from one not knowing what a Form 1045 was for a net operating loss. And we're like, okay, well, I guess we're just not going to discuss this with IRS. We'll just file the form. And then from the other side of the spectrum, we're getting a lot of really easy, you know, business penalty waivers in for late filing and things like that. And so we didn't used to have such success with that. So it's nice to see some things getting streamlined with the IRS.
Yeah, I might just add, you know, sometimes the good outcomes on these cases starts on that first visit, the client's first visit to the office or first phone call, and they come in with just like, you know, I got a lien or I got a levy, and they are, you know, really nervous, and just the practitioner saying, look, we're gonna figure this out together, it, like, makes them, you know, feel so much better. And sometimes it's like, look, you know, you're gonna have to pay this back, and you're gonna have to pay it in an installment agreement, but at least like they understand the compliance, they understand what the next steps are, as opposed to looking into this like sea of, you know, black sea where it's like unknown, and so, you know, I think from the very beginning, that very first conversation through the very end, regardless of outcome, helping a practitioner is always good. I can't say I've ever had a bad experience. Certainly, you know, some people think they're going to come in, you know, having heard a commercial, you know, that they're going to get some miraculous deal. You get that happens, and you just have a very, you know, frank and kind of radical candor conversation where it's like, look, you know, your situation doesn't warrant that, but what we can do is help you figure out how to get this paid back. But I would count them all as, you know, fairly, at least, you know, I think we probably would all say the same, is that, you know, fairly positive experiences, and just getting the person on the right track back to the good graces of the IRS.
Sometimes that's all they're looking for, is they need the guidance. So part of our job is educating them, truthfully. They don't know what they don't know, and they're just looking for help and guidance, and that's what we can provide.
There's a fear factor too.
Oh,
Yeah.
most definitely.
Yeah.
So have things changed in dealing with the IRS over the years? I mean, you've all been doing it for long enough that you've probably seen some changes at the resolution level and what your experiences have been.
I think definitely. You know, in the past, the audits would be maybe more all-encompassing and looking at everything and really getting into details. And what we're seeing is they're being much more targeted, and they'll come in and they'll look at these. They've selected things to look at, and if they look at those and there's no issues, they go on down the road and close the audits. And so, you know, there may be other large issues that they're overlooking or not exploring, and so the lack of resources to the IRS has affected their ability to really thoroughly do their job. Maybe that's a positive for a client. The negative for clients is resolving it when you have a problem that needs to be resolved. You know, getting someone that can actually make a decision, can actually, you know, do something that clearly needs to be done, can drag on for 6 months or a year just going through that process to finally get it resolved, when it used to take, you know, weeks or months. Yeah.
Yeah, absolutely. I have to agree on that. Is that we see with the budget cuts and the attrition rate at the IRS, the loss of so many, you know, seasoned experts and agents that really knew their stuff, and now we have so many fewer to work with. So we want to push those cases through for our client, and we don't have as much of that opportunity because we have less of their personnel to deal with. So it makes it a lot tougher to get to that end, which we're trying to get to.
Yeah, it's definitely a double-edged sword, but I don't know what else to say about that. It's a double-edged sword.
Well, a sword is a good place to take another break. So we have one more break where we want to learn a little bit more about Canopy. We have 2 short videos from Canopy, which will be followed by your 3rd CPE code, which will be followed by us wrapping up this session, which will be followed by us reading off the credits for this event. So you really need to stick around because you need to see what's been going on here all day long. So we will see you right after 2 messages from Canopy.
Every piece of Canopy is designed to make your life easier. And it all comes together because we understand how you work. We understand that just because a task happens every month doesn't mean it's a simple one-step process. So we made it so you can create recurring tasks with multiple deadlines and check-ins. And we get it that clients are always calling right when you're in the middle of something super important. So we made it so you can create tasks without ever leaving your current project. We call it Workflow. It's a task management tool, and it's made specifically for tax pros.
Canopy is the client and workflow management software built specifically for your tax practice. It's incredibly important to us that we build workflows that make sense for the way you work and the way you can best serve your clients.
Practice management includes everything from streamlining the way you manage contacts to unlimited document management, automated client reminders, billing and invoicing, and more. So when I first tell a tax practitioner that all this is under one roof, they're shocked. They've never seen it all in one place. And that's when they start to understand how powerful Canopy really is.
Your clients are expecting a more modern, transparent experience. And using intuitive client portals that can be accessed from the comfort of their home is only the start. Canopy makes it possible to improve communication and bring clarity to their entire experience. When you have such a robust set of tools all working seamlessly together, you can start to truly optimize your workflow in a way that hasn't been possible.
Well, welcome back. We'd like to show you the 3rd CPE code for this session, but only if you promise not to leave as soon as you get it. So we're going to display that code on the screen right now. We'd like you to write it down so that when you're finished with the day, you can go to the CPE/CE tab at the top of your screen to get credit for this and any other session that you've attended today. But meanwhile, we're not quite finished with this session on tax resolution, and then we've got some other interesting information to share with you later. So we've been talking all about federal tax issues and the IRS, but what about state tax resolution? How fun is that?
Well, it's equally fun, and it's a good reason to hang around for the remainder of this presentation, because it is the growth area, it seems like. Whereas the IRS's budget has been cut year after year, and there's less and less people, I think we're seeing it pretty well universally across the nation that states are ramping up, becoming more aggressive, putting more people in the field, and at least what we see here in Texas is that, you know, the comptroller, the Texas comptroller, is pushing the envelope and pushing it until a taxpayer fights back, litigates it, and a court tells them they can't do that. So I don't know what you're seeing, but definitely in Texas, it's aggressive.
In my home state of Colorado, they're aggressive. It's that the states are looking at their own budgets and saying, well, this is a way that we can, you know, maybe make up for lost revenues. We'll just go after these taxpayers. So I see states being far more aggressive, and I have the opportunity to help accountants across the nation. So I see all their states and going, wow, this is a uniform kind of across the board situation we're seeing. It's that they're being aggressive to try to get those tax monies out of the taxpayers.
Yeah, definitely. Being from Texas as well, I've seen quite an increase from peers in my own firm with some sales tax letters and audits this year that had never happened before. But I think the other state that's probably the worst for me is California. You know, they are so hard to get a hold of and so hard to deal with, and it's not fun at all. But if you can wait it out like a year and a half, you might get your way.
And what's bad for taxpayers and maybe good for you as a tax resolution person is, at least in Texas, if you get picked up for an audit and they make some changes and propose assessments, they're guaranteed to come back in 3 years. It's almost a continual thing until they come back with a clean audit. So it's definitely a lot more certain, and one thing to be aware of when talking to your clients, this is, once you've gotten on the radar, they're going to keep coming back until they stop finding money.
All right, and Kurt, anything else you'd like to say to kind of wrap up the session today?
No, but it's been a pleasure being here. It's been great, and we're kind of fans of tax resolution over at Canopy, and you know, again, just born out of that, you know, desire to help people and get them in a good spot, and so it's been a pleasure.
Excellent.
Yeah.
It's been great having all of you here today. And it's been great having all of you here today. This has been an amazing day. We're so excited to have finished up 10 hours. And what I'd like to do is, first of all, tell you that, well, I was going to tell you that there is on Facebook, we've posted a Facebook Live video of behind the scenes at Ensuring Success, so you can kind of see what's going on while all you see is us on the set. There's all kinds of other stuff going on here, but it got posted to the wrong page. So I'm going to get it up on the CPA Practice Advisor page later today. So go there and check it out, and you can see what's been going on behind the scenes at CPA Practice Advisor with Facebook Live. Meanwhile, I'd like to thank all of our sponsors once again who made this event possible, because we wouldn't be here without them. First of all, Canopy sponsoring this session, and then Abacus Next, Avalara, Core by BQE, eFile for Biz, Intuit Pro Connect, Receipt Bank, Sales Tax Institute, Sure Payroll, XCM, Xero, and Yetter Tax Consulting. And then we kind of want to bring a cast of thousands in here, whoever is left in the studio. We figured we'd just let everyone file in. First, we want to thank the people from AMS Pictures who put up with us all day long in their studio. And I don't have a list with last names, so I can tell you Margaret and Larry and Guillermo and Jeff and Emily, and there are plenty of others, and I don't even have their names, but they're all like here looking at us. So, and then also the CPA Practice Advisor team, which is filing in behind here. Barry Strobel's my publisher. Lester Kraft is in charge of our digital delivery. Rachel Lisinski was your IT person at info@ensuringsuccess.com. Jill Fuller, our marketing and meeting planning person. Isaac O'Bannon isn't here. He's at home, but he's been handling all of our social media all day. He's managing editor of the site. And Scott and Brian Citron had to leave, but they were here as traffic managers, making sure with Jill that all of our speakers and sponsors got to the right place at the right time in the right chair, and makeup and all the other stuff that got done here. So a big round of applause for everybody here at AMS and everybody, our speakers here today, everybody who's here, and you all, thanks for coming.
Thank you.